Welcome back to the show, everybody. Check out these headlines we have for you this morning. Ripple and Money 2020. We're going to talk about it. EU's MICA regulations say cryptos are securities. That's going backwards at my house. We're also going to talk about a new bill introduced in the United States to stop CBDCs. We're going to talk about this. David Schwartz, automated market maker trading strategy. Bring it on, baby. And we got this. XRP and the dollar Dixie index may spell a big boom for XRP. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on Twitter and YouTube for exclusive content. Right now, $1.18 trillion market cap for cryptocurrency. The market is off by 0.5%. Bitcoin, 26,800 plus, 1,800 plus for Ethereum. Tether market cap hitting all-time highs, 83.2 plus billion. Where does it go from there? Well, I'll tell you what, we're going to find out soon enough. XRP is 50 cents, and we're up 12.5% on the 7-day. Oh, my goodness, have we got something for you to see before we get out of here today. But right now, we start with this. It's Glint Pay, your personal alternative to banking. Make no mistake about it. Glint Pay lets you buy, save, send, and spend gold, physically allocated gold through your account and a MasterCard debit card. Click to get 50% off right now. Use the code that I have right here and get 50% off your vaulting and insurance fees for the next 12 months. This offer will not last long. Click that link from my sponsor underneath the video. Ripple and Wales move 100 million XRP to Binance and Bitstamp. It wasn't me. I just thought I'd clear that up. I'm sure there was some confusion until now. Ripple makes major move in Europe by sponsoring the Money 2020 event. Now, let me tell you something. I went to Money 2020 in 2019 when we were filming Kryptonaires. And if you haven't seen it, you can go see it. Type in Kryptonaires full movie. Watch it on YouTube. Let me tell you, there is everybody there. The Fed, central bankers. It is that kind of a conference, right? And I don't expect it to be any different for Money 2020 in Europe 2023. But let me tell you, isn't it just striking that Ripple could be a massive sponsor to the Fed and central banks around the world and one of their largest conferences they have every year, but still somehow be hung up with the SEC in a lawsuit here in the United States? I think we see an end to this that's favorable. I really do. I'm speculating. I'm not speculating about this, though. Crypto should be treated as securities, and without further steps, the EU's famed crypto law MICA may have little benefit. This is what the study produced by EP Economics here, and essentially, I'm not going to read the whole thing to you, but that's exactly what they're saying. Crypto assets should be treated as securities by default, and autonomous organizations that govern decentralized finance should be granted legal status, according to a study commissioned by lawmakers, European Parliament, that was published Tuesday. You know, all crypto assets should be deemed a transferable security, implying they would fall under the EU's tough governance and authorization rules that apply to traditional stocks and bonds, unless and until a national regulator says otherwise. You know, again, we have to watch this very closely. Obviously, we know the EU is 27, 29 nations here. This is not a small matter where this is going, and it does stem back to the states as well. Right now, U.S. lawmakers are slated to discuss digital asset spot markets during a congressional hearing next week. This will involve the House Agriculture Committee will hold the hearing on June 6, titled "The Future of Digital Assets, Providing Clarity to the Digital Asset Spot Market." Now, specifically here in the United States, that is what we're looking at. We're looking at, is it the CFTC that's going to regulate that side of things or not, right? Now, this here from Mike Morath here is a reminder about the Securities Clarities Act that was really originally submitted back in 2021, but now it's being reintroduced today, recently. And basically, and it blew my mind when I saw that it was back in 2021. I felt like it was last year, and it was the year before. Time is moving fast, ladies and gentlemen. The bill essentially distinguishes between an investment contract transaction, which is a securities offering, and the underlying investment contract asset, which is often not a security, like the orange groves in Howie. This means that a token offered as part of an investment contract would not need to transform into a non-security. It would not be a security in the first place. Now, I love this. I love the not being a security in the first place. But again, I think this speaks to the decision that we're going to get in the SEC versus Ripple case, ladies and gentlemen, because if the judge splits the decision and says that the early sales prior to on-demand liquidity's commercial use of XRP could be securities or are securities, then that's going to really debunk, what we have here unless the legislation is passed, right? Because if the judge finds that those early sales are securities, but everything going forward from ODL to current and forward is fine, and not a security, then that gives the SEC the same hammer to keep banging away at this market and playing whack-a-mole with all of the companies. Because if the early days were, then it gives them the right to go after every company, suggesting that all companies, when they start, are securities and then transform into a non-security. And I just don't like that. If it's not a security, it's not a security. And I like this bill, and I hope it gets more traction than it did in 21. We'll see. However, there's another effort in place from U.S. lawmakers, and it's to introduce a bill to halt the Federal Reserve's digital dollar testing. Listen, I'm a little torn here because I understand I don't want the Federal Reserve. Let me be clear. I do not want the Federal Reserve in control of a central bank digital currency. Period. Full stop. However, I think it is short-sighted to say that we not have a central bank digital currency at all. I think there are multiple different ways we could approach this problem without giving the Fed or the U.S. government direct access to the private money, digital or paper, as we have today. I think there is a way to get around this by putting third-party entities between the government and the issuance of the dollar, regulate the private entities, making sure that there's always a reserve or surplus there, and move forward. And give the people their privacy with the money, be it digital or paper. And I don't think that would be hard to do. So we'll see what happens here. But meanwhile, Jeremy Allaire from Circle lets all of us know that USDC stablecoin issuer now only holds cash and repurchase agreements to back its USDC stablecoin value. And this is important to get a hold of, because what it really means is that Circle has ditched all U.S. Treasury bonds from its USD backing reserves as a part of its precautionary measures to protect from a potential fallout from the looming U.S. debt ceiling showdown. Yeah, I get the feeling that they're seeing more downside, whether it's to the bond market or whether it's to the stock market. And it looks like Circle's taking the precautionary measures here to make sure that they don't get caught with any kind of downgrading of the bonds or readjustment of the interest rates and then caught upside down like some of these banks have been caught upside down. Meanwhile, let's look forward, right? A lot of that stuff is really depressing, but let's look forward to something that I feel is going to be very uplifting. And it's David Schwartz, CTO at Ripple, and one of the original architects of the XRP Ledger, has unveiled the trading strategy employed by the new XRP Ledger automated market maker network. Now, I was at Apex last year when they really kind of announced and unveiled this thing, and it was mind-blowing, and it still is. And I do believe that this is a real possibility here to participate with your assets in a way on a network like you never have before. So basically here what we're looking at is that the XRP Ledger automated market maker, introduced earlier this year, has garnered attention for its unique liquidity provision and profit sharing features. Schwartz took to Twitter to elaborate the intricacies of the system, explaining that the trading strategy employed is a volatility harvesting strategy. It capitalizes on price fluctuations by buying when price declines and selling when price rises, effectively arbitraging price differences over time. This is how you tighten the spreads on the price of XRP, giving a very informed and reliable price for anyone using it. And consequently, as it works out, and for the automated market makers, giving them shared profits in this tightening of the spread through the effective arbitrage price difference. He also clarifies that the auction mechanism of the AMM sells arbitrage slots for liquidity provider tokens, resulting in the destruction of these tokens. This destruction increases the fraction of the pool's assets represented by existing liquidity provider tokens. Additionally, the pool executes a trading strategy and charges a spread when providing liquidity, resulting in larger pools and increased exchange value for each token. Now, I want to read this next part very quickly, and then I want to say something here. Schwartz further shared his findings from simulations conducted on the trading strategy, indicating its success in volatile stocks. However, he noted that its performance diminishes when faced with consistent trends. Previously, the developer highlighted the uniqueness of XRP Ledger's AMMs. It says positioning it as a potential leapfrogger of other decentralized exchanges. One of the most distinctive features in his view is that it allows liquidity providers to claim a substantial share of profits that would typically be allocated to arbitrage. There it is right there. So basically TVL, total value locked up, is what he's talking about here. The more people that lock up the token XRP with automated market makers to help the system run and function begins to tighten the spread of the arbitrage and pay out that difference that is created by getting rid of the arbitrage to the automated market makers, which would be us staking our XRP on the network and getting rewards or a yield in return. Profit sharing, right? Pretty amazing. And I couldn't be more excited about it. But let's talk about this, because while we're waiting for a decision in the SEC versus Ripple case, while we understand what's just around the corner for all of us and the opportunity to participate in putting your assets with an automated market maker, I'm very excited about that. I'm also very excited about this chart in front of me here. The dollar Dixie, the dollar index chart, is a chart that usually is a inverse correlation to the crypto market. So if the dollar is strong, crypto is down. If the dollar is weak, then crypto is strong. That's usually how that works in a very simple way. And if you could see here in this particular chart, he's shown here that we see how the dollar's run up here, but it's looking like it could break and go down. And if it does, it could go all the way to 93 to 89 range. And this is a head and shoulders pattern here, showing that we're going to look for this and see. You get invalidation up here, may punish the bulls. We could see it break and bust down lower. Now, if we go back to what Eggrag Crypto shared here back on May 6th, it was this head and shoulders chart here, showing us much the same thing. So we're really at a point here where the chart is going to have to show us which way it's going to go. But if you add in the understanding that if the dollar Dixie breaks down and actually loses its value, that's going to provide, as history shows us, a bump in the crypto space. At the same time, we're also looking here at this chart, and we're wondering if we're going to see a repeat, because the Gaussian channel just flipped green. And basically what we're looking at here is based on historical data. We can see that there have been two instances when the Gaussian channel flipped green and the price of XRP was within the upper half of the channel. The first time this occurred was in November 2016, and the second time was in October of 2020. In Eggrag Crypto's opinion, it is unlikely that this is a false signal unless there is some unexpected ruling from the SEC versus Ripple case. However, it is worth noting that in comparison to the 2016 scenario, the price dropped 50% from the top range to the lower range before the big boom happened. He says here, stay steady, the big boom is coming, but that doesn't mean we won't get a big drop just before it happens. Not financial advice from him, me, or anyone else. That is where I'm at on this day. I'll catch all of you on the next one.